Simon Dixon, BNK to the Future.
Firstly, the reason I got into crypto is because fiat currency and banking is a debt-based system that is perpetuating one of the largest Ponzi schemes we've ever seen in financial history.
Yeah.
And so, you know, the fact that we've now got a next generation of financial products that are built upon an equity base of Bitcoin, collateralizing loans with 150% loan to value, and the market cap of Bitcoin and cryptocurrencies going up and up and over time, is a force for getting money out of that traditional system. Because we do have to remember, I left banking, and in 2007, the Federal Reserve had $2 trillion of debt, and it broke our entire global financial system. We now have $22 trillion of debt at the Federal Reserve, and we have not solved any of the problems since the financial crisis, and all we've done is patched it up. And now we're talking about, you know, these KYC and AML policies. You know, I bought my house with Bitcoin. I chose to use savings in order to purchase my house. The bank took 9 months of KYC and AML just to allow me. Now, until we talk about anonymous currencies, the fact is they could actually trace the entire history of my source of funds and source of wealth all the way back to the Genesis Bitcoin when it was actually mined. So this actually provides a new opportunity for regulators when you can attach that identity, but it also provides an exit because this traditional financial system is a Ponzi scheme, is going to collapse, a lot of people are going to get hurt, and we need an alternative system to hedge the bets.
That's a very relevant agenda, but
yeah, well, it's important. There's different forms of money and there's different use cases, different things you do. So, you know, with Bitcoin, the difference between Bitcoin and banking in a nutshell is when you put your money at a bank, the bank owns your money. It's not yours. You have to get permission to get it back. If you've got enough money, if you've got more than 10,000, you're going to have to do a lot to try and get your money back. With Bitcoin, you can own it. With money at a bank, you can't spend it peer-to-peer. They have to agree who you're spending it to. It doesn't affect the retail consumer because you're just purchasing things. But when you build wealth, that's when you can't spend it. And there's a lot of friction in spending your money and transferring it. With Bitcoin, if you want to send a large amount of money across the world, then you can do that in a frictionless peer-to-peer way. The final thing is savings. So with traditional money at a bank, you're going to have to work harder and harder and harder to actually maintain its value because it always increases the money supply based upon debt, and therefore it encourages you to take on debt rather than save. With Bitcoin, there's a fixed money supply that can never change. It's enforced by maths and code, and therefore if it gets more and more useful, then the value of it goes up over time because it's scarce.
Okay.
So you've got your savings and then your spending, and it still integrates with tradition. I could spend Bitcoin anywhere through a Visa debit card that's integrated with crypto.
About that previously. Yes, sure. Well, thanks everybody. You have an opportunity to pay with stablecoins tonight at Hilton at the Quarterdeck Bar. Please try it for yourself and see how it goes. Yep. Thank you.
Thank you. Thank you.